Welcome to this daily market commentary for Tuesday, the 2nd of July 2019. Welcome to your notes. Hope you had a good day. What a strange old day it was. Starting with crypto, Bitcoin just couldn't resist a couple of early attempts at breaking the $10,000 level. Two failures initially early in the day. Saw a sharp move back to 10,600. Then we drop and we break down to 9,750 before a recovery to 10,200. And then finally another dip down to 9,620 maybe, before a quick $1,300 rally back over 10,900. I'm sorry if you didn't see that price action coming. I certainly didn't see that price action coming. I think there was... You've got a market which got a little bit obsessed here with one level, and obviously today we have seen a complete roller coaster ride through it, under it, and above it. So, the end result on the day is Bitcoin has actually sort of closed the day $400-500 higher than where we left it at the same time yesterday. No real reason behind the volatility, just a market very undecided where to go from here, and probably a few people thinking that we were going to get a capitulation if we went through that $10,000 level, which obviously wasn't the case. I think there was some good buyers lurking just below, which, given the pullback we had at the end of the day, would certainly suggest to be the case. I'm sure there's a few traders out there scratching their heads right now, but you have to admire Bitcoin's resilience. Once again, we've seen a fairly powerful attempt to push it lower, and we've come back higher. Ethereum was a little bit calmer, had a couple of attempts at the 270 area, but also bounced back, although it has struggled to rally much past the 290 level on the day. I think some sustained time back over $300 is probably needed for the Ethereum rally to catch fire again. But obviously, if Bitcoin has made some lows just below 10,000, then that obviously will probably help Ether along the way, and Bitcoin itself ends up closing the New York day at around 10,750. For FX, it was the day after the euphoria from the weekend's events. So the presidents of the US and China having their meeting, and obviously President Trump and President Kim are having their little get-together on the North Korean border. Everything was all love and hugs, and got a pretty positive response from the markets all around. But for today, equity markets will be mixed. But overall, the dollar lost some of its gains from yesterday. Saw euro dollar get back up at 113 at one point. Aussie rallied up back up to 70 cents. I suggested yesterday that there might be an opportunity to see quite a nice technical formation there with a reverse head and shoulders, but today's price action has rather negated that. And we've also seen dollar yen drop back to or back under 108 from its highest near 108.50 yesterday. Gold had a sharp spike higher up towards 1408 as US yield sank, the 10-year yield dropping down to just below 1.98%. Sterling was a real underperformer today after comments by Bank of England Governor Carney noted that global trade tensions increased downside risks. Not exactly groundbreaking news, but it now has the market focusing on potential rate cuts in the UK sooner rather than later. On the political front, there were some headlines about the EU being very concerned that Iran has exceeded its stockpile limit for low enriched uranium. We had US Vice President Pence unexpectedly cancelling an event in New Hampshire and heading back to the White House, while almost at the exact same time there were headlines about Russian President Putin due to meet with his defense minister. I don't think any of this was related, just coincidence in terms of its timing. But it did have the market a little bit concerned and was probably one of the main catalysts behind the move higher in gold. By day's end, US equities have closed higher once again, with the Dow Jones up just shy of 70 points and the S&P closing at another record high today at 2973. Euro dollar slipped back to 112.85, with dollar yen trading quietly around 107.90, and cable at 126 the figure. Wednesday, we'll see an early close for US equity markets ahead of the July 4th holiday. I also see bond markets closing early as well. So watch out for the US ADP employment data at 8:30 New York time in the morning as a precursor to Friday's NFP release. Today, chart-wise, I decided to go and put up a dollar CAD chart. We have data out on Friday in both the US and Canada employment data, so we can often get a double whammy, if you like, on data coming out, and get some quite interesting news moves on the when the data gets released. So I figure it would be a good idea just to pull up a dollar CAD chart so we can see a little bit more of a big picture view. CAD is often viewed as a risk-on currency. So during equity market rallies and times of good economic news, we often see CAD rally or dollar CAD lower. I think we've seen that this month here. If you can see, this month in June, we've had quite a big rally globally in US equities and equities in Europe as well. And we've seen dollar CAD come considerably lower from 135.5 down towards 131, and actually made a low last week of just shy of 130.56. And as you can see from this chart, that low there actually goes back to, where we go, first week in November of 2018, and also just below there's another previous low. I think that actually comes in around exactly 130.50. So you kind of got two really important support levels there, which we have bounced off in the prior week. I would keep a very close eye on this level on Friday. If we get a weak US number and a very strong Canadian number, that level could break in a heartbeat. But for now, it's acting as some pretty strong support. And that's about it for the day. So an abbreviated day tomorrow. There will be a commentary, and then yours truly is going to have a well-earned day off on Thursday. Look forward to speaking to you then. Cheers.